Good morning and welcome to Morning Markets on Monday the 4th of December. Today we'll just look back on how asset markets performed last week and look to the week ahead. If we look back at how asset markets performed last week, very much a continuation of the trend that we've seen over the last 4 weeks, with equity markets continuing to move higher alongside bond markets. If we look at the S&P 500 in the US, it takes us back to the levels that we were in the middle of the summer. I mean, in large part, this comes from a couple of facts that are really supporting asset markets at this point. Looks like economic data in the US is now starting to show those marginal signs of being weaker than maybe some people had been expecting. And when we take that alongside the commentary from major central banks that we are at or very close to the peak of the interest rate cycle, that's certainly providing a supportive backdrop for asset markets, and indeed a real positive and a tailwind for multi-asset portfolios in terms of both equity and bond performance. If we just look at the rally that we've seen in Treasury bonds in the US, it is quite significant. And to put that in some context, the yield was around 5% towards the end of October. When we look at the screen this morning, 4.2%. So quite a significant move there. And remember that bond prices move inversely to the yield. So that falling yield level means prices are rising over that period. Just an indication of that data challenge that we're seeing in terms of the US. Friday we got the ISM manufacturing data, and what could we see there? Really that activity remains in contractionary territory below that 50 level, but also some of the areas that are important for the economic outlook in terms of employment trends, production and new orders, all exhibiting challenging readings at this point in time. Looking to the week ahead then, a couple of key data points that we'll certainly be touching on in morning markets. The first right at the end of the week, because we're in that normal sort of choreographed start to the month, will be US employment data. Really what we're looking for there is probably a slight improvement in the employment numbers. Last month it was 150,000 jobs added. Probably the consensus is looking at 180 to 200. That would keep employment rate at 3.9%. That's really important this week, just given it's one of the few data points that we have as we move into the Federal Reserve's last interest rate setting meeting of the year on the 12th and 13th of December. Elsewhere across the globe, Europe, focus will be on retail data, just seeing if there's any glimmer of improvement there. It's been a challenging period for data from Europe, so let's see how the consumer is holding up, and that data comes Wednesday. And then across to Asia, really a focus in China, just to look at the trade data, import and export numbers to get a sense of the domestic economy, but also how international economies are behaving as well. Please do tune in to Morning Markets for those over the course of the week. And that's us for today. Many thanks.